1-866-928-3310. And we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Monday, 16th day of March, 2020. Thanks so much for joining us. I think we should just open a word of prayer for our country. One of our members, a family member, he and his wife are in the hospital. They've had the virus now for a few days. Rich, just want you to know we're keeping you and your wife in our thoughts and in our prayers. So let's together, let us pray for this situation. Father, I bring our president and other leaders in different positions before your throne of grace. May they find mercy and grace before you as they look for solutions to all these different problems that are affecting our nation and the world right now. We pray for the world, Lord, not just America. America first, and the world, everyone, God. Father, I pray that the president would find the right advisors to give him wise counsel so that he can make the right decisions. Your word says no man is placed in authority unless you give it the nod. So he's there. He's obviously your man. He's our president. Father, I pray that you would expose and remove wrong people around our leaders that are just up to no good. May all their demonic inspired counsel be exposed and destroyed in Jesus' name. Thank you, God, for leading us in the way that we should go as a nation. In Jesus' name we pray. Amen. Okay. Well, I guess we need to bring up a chart. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. Days you're out of the office, away from the desktop, point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. During this 2-hour period each day, Monday through Friday, you can also find us streaming live on YouTube, on Facebook, on Twitter, and coming soon to the TradingView platform. So, let's take a look at that chart. I guess daily chart would be the place to start. I am using the continuous symbol just so I can bring in more data. You can't trade that symbol. You have to go to the current contract. And by the way, we have rolled forward to the M, as in Mary, contract. Now, let's see if we can get this chart to open up a little bit. Come on. All right. So we had a swing low put in December the 26th of 2018. It was the day after Christmas. This little area right here, that represents the worst December since 1932. Followed by what's arguably the most incredible rally the markets have ever seen over the next year and some months. From that swing low the day after Christmas 2018 up to, I guess it looks like February 20th, right there. That is the all-time historic high in the S&P 500 Emini Futures. Now, we talked about it when it happened, price gapping below the BBC. Sometimes when price can't get through an obstacle, it will take opportunities when there's light volume, and a small amount of volume can tend to move a market. So tried to get through, actually we tried to get through all of these days, couldn't do it. Tried to get through here, tried to get through here. And then, correct me if I'm wrong, this was a Sunday night. We gapped over the BBC. And then on February 26th, we got confirmation of a down leg via the bearish cross. And we put in a leg that took us all the way down to 28.58. It's a 50% fib here. Then we bounced. A bit of a triple top right here on the daily chart. And then we went down to the 62% fib. So we had 3 days there, 3 days there. That was last Thursday. This was Friday's attempt to negate we discussed on the radio show Friday that, well, it was my opinion. That's all it was, nothing more. My opinion was that the president was giving his speech Friday afternoon from the Rose Garden during the final hour of trade in hopes that it would somehow shore the markets up. Now, he may have had his plunge protection team in place, or who knows who was in on that. And hey, maybe it just happened. But from a strategic standpoint, it seemed like a very wise thing to do. Now, it was a big gamble, but he took it. And this president, when he gambles, he seems to come out on top quite a lot. So anyway, the Rose Garden Rally, we'll call it. Then last night, unheard of, the Fed announced zero interest rates. In fact, let's take a look at exactly what the Fed said and what the Fed did. Fed. Now, the president was pretty harsh on him Friday. Did that weigh into this decision? I would like to think not. Okay. What would give us the best rundown? Looking for something from the zero hedge. Sure, we could go with any one of these. Let's go with Barron's. They're semi-generic. Or you know what? Let's go with the Wall Street Journal. Okay, now this happened yesterday on a Sunday, just as the president timed his speech for the final hour of trade, and because he was late to the mic, turned out to be about the last 30 minutes of trade. This happened exactly 1 hour before the Globex opened last night. And I just hit a paywall. Okay, so we won't get our information from the Wall Street Journal. In fact, let's just go straight news. All right, we'll take Fox. Bring it on, Fox. Fox. All right, here we go. All right, Federal Reserve on Sunday. Now, this isn't new news. This happened yesterday, again, 1 hour before Globex opened. The Federal Reserve on Sunday slashed interest rates by a full percentage point to near zero and said it would buy 700.
Just in, we are learning the Fed is set to take its most drastic steps since the
When your skin is feeling dry and crinkly, time for Gold Bond Peeling. Ultimate lotion, ultimate skin.
I've got commercials. I've got
financial crisis.
I've got audio in the background. All right, let's try that again. It said it would buy $700 billion in Treasury securities, an aggressive step to insulate the U.S. economy from the coronavirus pandemic. The coronavirus outbreak has harmed communities and disrupted economic activity in many countries, including the United States. The Federal Reserve is prepared to use its full range of tools to support the flow of credit to households and businesses. Benchmark federal fund rate is now at a range of 0 to 0.25%, down from a range of 1 to 1.25%. The cut essentially brings the nation's interest rate to zero, something that President Trump has repeatedly pressed for over the past year. Now, the Fed chief, Jerome Powell, he did a conference call, a Q&A conference call yesterday afternoon by telephone. And one of the questions is, does this mean that the next step is that we go to negative interest rates as some countries have done? His answer was, I do not see that as part of the plan or as necessary at this point. Now again, the president rallied the markets Friday. Jerome Powell attempted to do the same thing, I believe, last night. Unfortunately, once the S&P opened, we were limit down inside of 30 minutes. In fact, let's see. Let me make sure I'm in the right. I gotta make sure all my charts are set correctly. No, this one isn't. Okay. So let me fix that. If you need to know how to set time zones, see, Arizona doesn't do daylight savings time. So you folks, most of you, won't have to worry with this. So part of the year I'm UTC 5. If I want my charts to reflect New York City, East Coast, I have to change it to UTC 4. Okay. So now we can see that we're printing the 12 noon to 12:30 p.m. Eastern 30-minute candle. So here was the Rose Garden rally. And then here's the 15 minutes that futures continue to trade after stocks shut down. This was that final 30-minute period that the market reopens from 4:30 p.m. to 5 p.m. Eastern before it shuts down, and then the next open, whether it's in an hour or we're going here from a Friday afternoon to a Sunday evening, inside of 30 minutes we hit lock limit down. Okay, now if we break this down to a 5-minute chart, we'll be able to see so here's 1800 hours. There's the Globex open. So it took 5, 10, 15 minutes, give or take, 5, 10, 15 minutes to reach limit down on the S&P. And then this morning when the limits came off, there's the gap lower. It's a retracement, bullish cross. Price pulls away, price pulls back. Price runs into red and falling, which we have to consider as good resistance until proven otherwise. Okay. My suggestion at this point is that this is a head fake. In other words, the market looks like it's going to do one thing and does something else. So we're going to look at this area here as a window of opportunity. Now, this area right here where the bullish cross took place, I want to see price get below that. I want to see it get below these wicks. All I'm looking for is just a little window, and this is no little window. It may look small. Top of that window's 2466. Bottom of the window's 2436. Okay, so that's a 30-point S&P window right there. So we'll keep an eye on that. Back to the daily chart. Okay. Let's do this real quick. Let me take this chart. I'm going to make this a monthly chart. Make it at ES. And we're going to pull in as much data as this platform can give us. All right, that looks like a pretty significant low there. All right, so we'll draw some fibs from that point right there. So from the January 2016 low to the February 2020 high, that's 4 years right there you're looking at. That's 4 years of monthly climbing. 62% of that is gone in 2.5 months. Actually, here's January. Here's February. Now, this bearish engulfing monthly candle on the ES, well, two of the most powerful candlestick signals there are is a bullish engulfing and a bearish engulfing in proper context. After a 4-year climb, would that be proper context for bearish engulfing? It couldn't get any better. Okay, this is what brings meaning to the signal. The greater the context, the larger the time frame, the more powerful the signal. So some would say the writing was on the wall, and here we are now in March. We've gone from that 24% fib all the way down to the 62. Obvious support at this point. Right there. We got a bounce. Now we got to see where this is going to take us. All right, let me give you the numbers from around the world. Start here in the U.S. And we had an active evening in the Telegram discussion group. If you weren't there, should have been. It's the trial discussion group, so everyone has access to it. You just got to be on the trial. Or, of course, if you're a CFRN partner or passport holder, then, of course, you have access to everything CFRN. All right, so let me see if I can get this data to load. All right, starting here in the U.S., the Dow is currently down 1,942 points. It's 8.5%. NASDAQ down 600 points, 7.5%. S&P 500 down over 200 points, 7.5%. Russell 2000 down 110, a little over 9%. In the commodity basket, crude oil down $2.20, trading $29.53 last. That's a drop of 7%. Gold down $14.40, trading $15.0230 last. It's a drop of almost 1%. Asian markets at the close. Nikkei down 429, 2.5%. Shanghai down 98, that's 3.5%. Hang Seng down 969, that's a drop of over 4%. In the European markets at the close, FTSE dropped 188, 3.5%. DAX dropped 307, 3.33%. And the CAC down 181 points, 4.5%. Needless to say, that's a red day for Asia, a red day for the UK. It's a red day for here. It's easy for you to say. It's a big red radio Monday here in the US of A. Let's go over to Michael, get a recap of what happened in the live training room this morning. After that, we'll chat with John. Let's see what his take is on things. And we'll walk through what we did last night in the discussion group, Concierge Trade Alerts, Logic 247. There weren't a lot of those, but the results were, well, I'll show you here in a few minutes. Michael, you ready?
Yeah, I'm ready. Yeah, it is a Monday, for sure. Yeah,
Oh, there goes that headset.
Oh. No, not again. Okay, I'm not going to move. Can you hear me all right now?
I can hear you
It
right
worked
now.
fine this morning.
Yeah,
Okay.
I can hear you.
Then I won't move.
Okay.
Yeah, so the kids get a 2-week vacation, at least.
Yeah, our schools are closed too. My kids, until further notice.
Yeah, until further notice, is that what they said?
Well, I think they're going to update everyone at the end of the week.
Well, it's craziness. And, on Friday, I said, buy a put, buy a call, because something's going to happen over the weekend. And, when they come up with a cure for this, the market's going to explode upward.
Yep. Yes, it will.
But right now, just hedge yourself. And, buy a put, buy a call. And the puts killed it. But they're not cheap anymore with the volatility that we have.
Right.
And every Friday, think about that. Right now, until they have a, when they have a cure, then on Fridays you won't want to think about that. But something has happened every weekend for the last month, and that's when you can't trade, when you can't do anything, that's when the puts and calls come into play. I mean, it's defined risk. You're not going to lose more than you paid for it. On one side, you will lose all that you paid for it.
Right.
But on the other side, it's unlimited. All right. So let me get into it. Yeah.
Okay, here's your charts. They're locked and loaded.
Okay.
Go ahead. What'd you say?
Okay. I was just going to say, so Macy's down in Florida right now. They drove. They didn't fly, thankfully. And not on a cruise, thankfully. And I don't know. She's with about 6 of her friends. And I'm sure they're going to be with other friends. So hopefully by the time she gets back. And they don't know when she's coming back. Because she went down there with friends. So I don't know. Hopefully everything's going to be okay.
Yeah, hopefully.
I worry about things like that.
All right, let me hit mute on my end. It's all yours.
Okay, I got it. All right, good afternoon, everybody. Today is Monday, the 16th day of March, 2020. I only had 5 trades today, and we were well, let me show you the spreadsheet. Hang on. Why does that thing seem to go away all the time? Anyway. Let me show you the spreadsheet. Today we brought our daily average down just a little bit on the month. Hang on. There we go. We brought it down to $596. But we were up $550 per contract. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today we're up 5 on crude, 10 on gold, and 32 on the ES. So we're up $550 a contract. Today it took 17 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 5 trades. Okay, so on the month now, we're up $6,557. That's over 11 days, averaging $596 per day. On the year, we're up $13,510. That's over 47 days, averaging $287 per day. Okay. Now, what we teach you and what we want you to understand is that you don't have to have a $550 day. If you can consistently have a $100 day per contract, that's all you need. That's all you need. If you have not taken a free trial, let me go here and do this and this. If you have not taken a free trial with us, go to the homepage at CFRN.net. And over here in the right-hand column is 5-day free trial applied at CFRN.net. You can click on that. Or down here it says free 5-day trial. Or use our indicators for free. Any one of those is going to bring you to this page. And on this page, all we ask for is your name, your email, your phone number. And you can tell us your biggest trading challenge. So we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay? If you don't do that, we don't know you took the trial. All right. Now, I'm not going to go through everything because the markets were just nuts. I actually shut gold and the ES down today. But I will show you places where the highest probability trades were. Okay. Now, I'm going to back it all the way over here. Hang on, it's coming back. Okay, I'm not going to do the ES today. I mean, well, we had 3 trades on the ES, so I guess I have to. There we go. Okay. So, what you want to look for is the MA1 be in the right color, the cycle be in the right color, having divergence, and that's the highest probability trade. All right, this is the second highest right here because the MA1, well, it didn't just change color, but there was a short there. I mean, now I can go through this and I can just point it out to you. There was a short there, a short there, a short there, a short there, a short there. Tried to change directions, mix the slingshot up. Now, what I was saying in the morning session, while all this was happening, is watch the slingshot. Okay? Because down here, this is telling the story. This is telling where it's going to go. A short there. We didn't really get a trade set up there. Then it changed directions along there. We didn't actually get the trade set up here. But everything's going so fast. But down here, watch the slingshot. Okay? Along there, along there, along there. You see down here, this is saying it's going to go up. Okay? So we've got along there, and another along there. Keep in mind, 10 ticks is all you need. 10 ticks is all you need to get the goal for the day. You know, I know, some of our traders, they drop from multiple contracts down to, down to like 10. Part because of liquidity and part because the markets were just crazy. And, I got my goal for the day after 17 minutes on my first trade. And then I traded 4 more times. And then I was just talking about trading because I didn't want to be in it. Honestly, my DOMs weren't keeping up with my charts, and and there's a spread like right now. Look, with the spread here on gold. I don't want to be any part of that. All right. I went to larger time frames and looked at things, but the DOMs still tell the story. You know, if there's a spread, you know, I don't want to be any part of it. But that said, there was a short here, and I'm still on gold, and I'm only 8 minutes in. Okay, you know what? I'm gonna back it out, because I mean I could spend an hour, 2 hours talking about this on gold alone. The slingshot was telling the story accurately the whole time. Okay. And I'm going to jump over right now. I mean, we picked up on gold on our first trade, which I still haven't gotten to. Well, I just went by it. But we picked up 10 ticks on our first trade on gold. On the euro, let's back that out. Euro and crude oil were more tradable today than anything else. Okay. Though I didn't trade the euro at all, it was, I mean, if you look at the slingshot, you see this pullback right here, green line, away from red, going down. We have red on the MA1. You see this right here, blue going up, blue going up. That's what you have to focus on. When the market's crazy like this, in this short time frame like this, that's what you have to focus on. Okay. I know it's, you know, all the rules still apply, but when it's moving around so fast, that's what you have to focus on. Crude oil, when we get in crude, one trade. Okay. Now, it doesn't matter what market it is. It's always going to be the same. Focus on the slingshot. Okay? When the markets are crazy like this, I'm going backwards right now. I know. I'm trying to get back to the beginning. Here we go. Okay. So right in here, you want to do anything, right here. Bang. Right here. Bang. Right here. Yeah, there were no trade setups up there. That's our one trade right there on crude. It turned around, it started to run up. I mean, it was just crazy. And I knew it was gonna be. I knew it was gonna be. You know, it's fun to watch, but you know, when you have money on the line, it's, well, it's a little more challenging mentally. Right there, right there. I'm looking at the slingshot right now. Okay, you see that? That doesn't happen very often until today. Then it happened there, happened there, happened there. Usually they're nice changes of direction. But I mean, look at that. Inverted head and shoulders on the slingshot. I don't know. What can I say? We picked up 5 ticks on crude today. Now the ES, you know, the ES was locked in the beginning, and so I really don't even want to discuss the ES because it was just crazy all day. I mean, I shut the ES down most of the morning session, but again, the slingshot is telling the story right here. You see the separation between the green line and the cycle. The green line and the cycle and what's going on up here. But my DOMs weren't keeping up with my charts, and so I just stopped watching it. I actually really did shut it off. But on the morning session, I'll bring the spreadsheet back up. Where does it go? Oh, here it is. Okay. On the morning session, we're up $550 a contract. That was 5 ticks on crude, 10 ticks on gold, and 32 ticks on the ES. Okay. Today it took 17 minutes and 1 trade to get to my goal for the day. At that point, I was up $100 a contract, and I took a total of only 5 trades today. So on the month now, we're up $6,557. That's over 11 days, averaging $596 per day. On the year now, we're up $13,510 per day. That's over 47 days, averaging $287 per day. Okay. If you have not taken a free trial, you can go directly here to eminitrainingschool.com, and all we ask for is your name, your email, your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you, and hit the send button. You'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So you got to do that. All right. And with that, we can pass it back to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Yeah, so it was crazy this morning. I had to put gold down. Yeah, 17 minutes in the first trade, but the first half hour, things were okay. But as the day, as the morning session went on, it just got crazier and crazier. And I had to put down the ES and even gold. So the euro was the most tradable market, and I didn't place a single trade on it. But the euro and crude oil, looking at the volume on them, seemed more normal than anything else. But I mean, we've got gaps to fill now, so we're going to be working on that all week, I'm sure. And it's, well, like I said on Friday, buy a put, buy a call. It's that bell's for you. I did. I opened it up. He's okay. Yeah, his mic's open. I saw he was in there. Yeah, I mean, the markets right now, the euro and crude oil. And it's not it's multiple time frames. You can do it. This morning it was difficult in in the 4-tick range because it was bouncing all over the place. I could have placed a trade on gold and pretty much any time, made money. I only did one. It was my first one, and I made 10 ticks. And that's the goal for the day. After you get the goal for the day, what do? You put the mouse away. Now I ended up getting 5.5 times the goal for the day. Yeah, well, it was one ES trade that really blew it out. I had one ES trade for 8 ticks, and then another one that brought me up to 32 ticks. But I got the goal for the day on the first trade, and looking at the spreadsheet, it's becoming a pattern. It really is. It really is. Get it on the first day. I'm in the first trade. 1, 2, 3, 4, 5, 6, 7, 8. 8 out of 11 trading days so far this month, I've gotten the goal on the first trade. And yeah, it does. And when you're looking at it, true. When you're looking at it on a 4-tick range, if you look at it on a 30-minute right now, like you're looking at on the gold, gold right now isn't giving us anything on the 4-tick range, but it did. It gave us highest probability trade setup, even with a gravestone doji. It was just killing it. And so, you just got to learn how to understand. Learn how to understand. That's redundant, but but you have to, yeah. What the indicators are telling you, and price is going to tell you a whole bunch. The indicators are going to tell you more precisely what to do. And yep, they do.
Hi.
Hey, John.
Yes. I hope everybody's feeling okay today. Yeah, I was just saying, I hope everybody's feeling okay. Yeah. It's too bad. It's tough. That's tough. Yeah. So this is a very dire situation, unfortunately, what's going on. And, whether the Fed came in this morning and did something, or whether this is just a kind of a natural bounce, unfortunately, the outlook is pretty grim. And we're in the real 87 heavy situation right now. The fact that this rally, that they didn't kind of continue this rally last night was a real big problem. And the fact that we were sort of so lock limit down is really troubling. The exactly. Yeah, look, the the problem is these fixes are out of control. I can't believe I recommended these things right at the bottom, and they're up like 10 or 12 fold in a yeah.
Yeah, it's fear.
Yeah, and look, the good news is, these things I've been working on are actually working very well, actually, and it's tough to do them, but you just have to do them. You have to follow the disciplines, and you can make a lot of money very quickly. There were a couple of star performers this morning. The golds basically opened on their lows and rallied very strongly, and the fact that the gold stocks started rallying before the gold rebounded was encouraging, because when you see the gold rebound, I actually told some people this morning, as soon as you see the gold come off the lows, you can probably buy the market, which is right after that halt, the trading halt. And sure enough, we had a rally. Right. And did you get some shorts off last night before the limit? Yeah, that was a tough thing to do, actually, to be honest with you. But now a stock that's performing remarkably well today is DOCU. Yeah. Yeah. It'll kind of surprise you, because you'll sort of say, "Where's the bear market?" It's DOCU with a U on the end. Yeah. Oh wow. Okay. Yeah. Unfortunately, that rally is petering a little bit, but it was encouraging. I noticed that Adobe didn't make a new low today either. Oh, by the way, Adobe was a phenomenal performer on Friday. It was one of my favorite leading indicator stocks, and it really had an incredible rally before it succumbed to this today. So, eyeballing this, it kind of looks like we're going to open lower tomorrow, and potentially could reverse upwards pretty strongly. Actually, I think if we do, maybe by the time tomorrow rolls around, the Fed might have their act together, and they maybe summon all the central banks in the world to try and create an upward reversal. Failing that, we're going still lower, lower still. So this right there, that little dip, yeah. Yeah. Well, yeah, we're probably going to take. No, we're probably going to take it out by some degree. And in fact, it could come back to the top of that last 2015 high there, and which is probably where we would, just hold above 2,000, perhaps 2150, somewhere like that. And then we could possibly put in a decent size reversal. Look, the good news is that China has kind of gotten over it, and so basically. No doubt about it. And the numbers, most of the recovered patients are in China, and the Chinese have figured out how to respond to this, and I think they're getting the word out around the world. I wouldn't be surprised if Trump announces something, to that effect on treatments pretty soon. That could bring some relief. Listen, there's 2 or 3 things right now that are working on this, and there's a high likelihood that maybe they're planning some kind of mass production to get it out to people. It's treatment. Various different treatments. And I got to do a little bit more checking before I talk about them, but it's definitely very encouraging, and the likelihood of this getting into the it's not necessarily a preventive, but it would be administrable fairly quickly if somebody comes into a hospital, I would imagine. But there's some people who say that they've had some stuff for a while and they're working, around the clock to, I guess, check out the side effects and things like that. So and I wouldn't. Well, look, there's some things they're saying that some of the things you take for heart disease actually kind of create. They alter the cellular structure to some extent and create a kind of a welcome for the virus, which is a bit of concern, because a lot of people. This might explain why people
heart disease or blood pressure.
Exactly, those things. So. One of the things that's apparently working is IVs with high concentration of vitamin C, up to 2,400 units, whatever that is, and that's that's one of the things out there that's not really a drug, more of a kind of a just one of just the power of that on its own. I mean, certainly, anybody out there would probably be wanting to take vitamin D, and because vitamin D tends to prevent colds and flu, so it might help you.
Well, I mean, you get it from the sun.
Yeah, And they're
And
actually saying that, if you are infected with this, it's a good idea to be out in the sun. It helps get out, helps you get over it.
no, I walked 7 miles in the last 2 days. Out in the sun. Jake and I went hiking yesterday. I think did a 3.5 mile hike, and when Jada, no, we did a 3.5 mile hike the day before, and I walk my dog a mile every day, at least a mile. Usually
One of the
2 miles.
most encouraging things is that Thailand has only Thailand has had the infection almost as long as China, and they've only got 118 cases, about 70 cures, I think, and 1 or 2 deaths. And the reason is the temperature in Thailand is around 90 degrees. So it's keeping the the thing from spreading, I guess. So the quicker we get warmer weather, that's probably going to help a lot as well. Supposed to be, yeah. No. Yeah, yeah. Yeah, I was. The Guardian's no friend of Trump, So, yeah. Listen. I think the gold is which look. I think we talked about this on the show before. The commercials have been caught short. They basically conspired to break down the gold and silver to cover their shorts. We actually discussed this ahead of time with somebody yesterday. Said it's got to come down to 1450, and guess what? It came exactly down to 1450 this morning, and then it rallied pretty strongly up to positive. Just went briefly positive. It's close to getting positive again, but it's not quite there yet. But I think if it does go positive, and by $10 or $20, it could actually continue and potentially put in the mother of all reversals today. Mhm. But yeah, no, neither do I. But it could change because right now, the way it's looking is quite. Look, I think the Fed, if they really go crazy with start throwing trillions of dollars at this market, which they very much might do, I think you're going to see. Well, just being at zero is good enough for gold. Now, if you just if you can go back to the S&P for a minute. And maybe on a kind of a, okay, if you could go back to, like, can you do like a 3-minute or maybe a 5-minute on the chart? Okay, well, that's good enough. Yeah, you see on Friday, do you see how they knocked the market down first before before it went up? That's, the last time Trump spoke. Mm-hmm. Mm-hmm. Mm-hmm.
I think he said he's going to call him back.
What I'm suggesting is that downward spike on that was followed by a blistering rally is something that could happen even to this market. I mean, right now we're actually starting to look, if they get this is a little bit like a repeat of Friday, actually. If they get this, except for the fact that we were up on Friday, if they get this thing back up above the limit and start pushing towards the second limit of last night, you've got a possible double bottom in place, and it would actually improve the technical structure considerably. If they got it positive today, that would be something else, and I wouldn't rule anything out, in all honesty. I think mm-hmm. Yeah. We are. This is quite an impressive rebound here at 1:15. This is a sort of a time it could happen. It's happened on this show before. We've seen bottoms around this hour. So we've actually got a developing quite strong buy signal here on some of my indicators. Whether we can get there or not, because sometimes you get these false buys when you're in a really pressure situation. So you have to be careful of that. The other thing is the VIXs are obviously at extreme levels. If they can break them down and do a little bit of what they did on Friday, that would be right. The one that's kind of interesting is the SQQQ, right? Yeah. Because this one, on Friday, they whacked, this one is giving a different kind of perspective based, right, this is based on the tech, okay? So we actually peaked on the previous day. They knocked it down on a Friday and then it went up today. But now, see that little red candle developing there? I mean, if they can get this thing, if they can push this thing down, later today, this market could rally a lot, so keep that in mind. So the big question is, which way are we going to go here? Are we going to go blasting higher, or where are we going to break down? And we've got a kind of a double top on the UVs, but the UVs and the VIX, TVIX has been so strong, it's just like crazy. Mm-hmm. Yeah, put up FNV, Dwayne. Frank November Victor. Look at that rebound today. If you can put that to a daily. It's some kind of reversal. That's what I'm getting at with the down before the up, Yeah. Check out can you get Canadian FNV? Yeah, that's one. Yeah. Look at that. That's even bigger deal. So, yeah. Yep. So the other thing that's kind of weird is, if you look at the bonds, or put up the TLT for a minute. Okay, it's crazy how these things peaked out like a few days before the Fed lowered. Right. So, and then if you can put the bonds up, the bonds are the same kind of story. They went all the way up to about 190, somewhere like that. But unfortunately, the downward action in the bonds is not enough to, yeah. I mean, based on that chart right now, it kind of looks like we should go back up and test that 190, but it's not a guarantee. But it's sort of weird how it went to an extreme, several days ago, and since, normally, falling bonds like this would have given some help to the markets, and they did give some help. We did have this wreck up. I don't know. It's basically, I mean, I think it's an incredible opportunity for the U.S. government to refinance potentially all of the debt they have, and almost have no interest rate at all. No, that would be, it's kind of a no-brainer, and maybe they'll do it. So. Yep. So we'll just have to see how the rest of the day goes on, and weather our way through it. But I do believe if we're down hard tomorrow, similar kind of action, I think a potential bottom might be better. It might be a better bottom than trying to do it today. I just don't think it's like a it's like trying to climb up the Hoover Dam, or something like that. It's kind of overwhelming right now. So, yeah. Alrighty, listen. No, thanks very much. Have a great afternoon, and have a safe, day to everybody, and good health. Thank you.
Oh, Randy, or who was it just said that? Somebody just notified me that the sound was off on YouTube. Thanks very much. Appreciate it. You know, I really need to start monitoring that chat box, I guess. But thanks for the heads up. I've opened the mic on YouTube now. Okay, so back here. So we've got a reading of 32.6. If we double click on the ATR indicator, and it's built into DT Pro, and I think most every trading platform has some version of the average true range indicator. It's not any proprietary deal. It just looks at the high to low range of however many candles you tell it to look at. I just wanted to show you the properties box if I could. There it goes. You can make it any color you want. And see, I've got it set for 100 candles. I was just using 100 as a round number. If we go to the default setting, we can see, and why is the default setting 14 days? I have no idea. 14 is the default setting on a lot of indicators on a lot of platforms. So looking at the last 100 candles, the average range is 32.7. Now if we make it 14, if we look at just the last 14, the average true range of each one of these candles is 40 points, 40.6. Now, again, according to articles you'll read on the internet, if you want to use the ATR as a strategy for establishing your stop loss or even trailing your stop loss, you go 1.5 times the average true range. So in this case, I mean, we're talking about a 60-point stop loss. Is it possible to risk less? Yeah, you can still risk 2 points. You have to drill down to a very small time frame, and you have to be willing to accept the fact that you'll probably have a number of false starts before you, and that's okay. If you have a small stop loss, a couple 3 points, and you get stopped out, stopped out, stopped out, and then you catch just one of these candles that runs 40.6 points. This is what I was referring to the other day when I said, you know, if you believe you need a larger stop loss and maybe you think 10 is the right number, you can risk 10 on one trade, or you can take a stab at it. I hate that terminology, but you know, you see an entry, so you risk 2 points. Now, in this case, you know that the high probability is that you are going to get stopped out because you're only risking 2 points. So it sets up again, you risk another 2. Again, you know that the high probability is that you're going to get stopped out. But perhaps on that 4th or 5th stab that you make, if it's the 5th stab and you've been risking 2 points on each one, okay, you're now down 8 points, but that 5th one is the charm, and you jump on the back of the candle that runs 41.3. You follow me? Okay, that's a scenario with a happy ending. Could have gone the other way, of course, but it's something to think about. Do I want to just dig my heels in and go, here's my stop, take me to the target or take me to the stop, or try to adapt to current market conditions in a manner that maybe you didn't think about before? Okay. So the S&P last night was, what did I say, 25.35. So the market gapped over it. Come on. Market gapped over it, but then it came back and caught it on the second time. If I hadn't just rebooted the charts earlier, I would stop and do that right now. What I need to do is I need to offload some of this workload as far as the publishing on all these different platforms. I need to offload that to another computer. So, but you get the idea, 25.35, and we're well into this window of opportunity now, the one that we highlighted. So let's take a look at the 5-minute version of that window. Now we got a great trade setting up right here in Crude. Well, it already set up. It's underway if you were participating. Pull back to the BBC. Now, blue and climbing, we recognize that's going to be an obstacle. If price can get below blue and climbing, then there's a window of opportunity, down to these lows. It's pretty tight quarters. So you could just, we've got a zone at 2890/95. So you're coming right into a zone. We already hit the zone, bounced to the BBC. See, when you approach a weekly trading zone from above, you expect it to be good support. It was. Sent price back to the BBC, which when we approach from below, we expect to be resistance. So it's now sending it back down to the zone. And on the way to the zone, it's going to encounter blue and climbing, right? Which, in and of its own right, can serve as potential support. But this is Crude, and we were looking at the S&P, which is halfway through the window of opportunity over there. So let's make this an ES chart. M. Okay. All right. So 30-minute here. We had the bearish cross. Now I better make sure the time zone's correct on this one. No, I need to fix this one too. I need to go through and fix them all. So UTC4. Okay. All right. So on the 30-minute, we gapped lower here. Basically, this is how the data printed. Pull back to the BBC, which we expect to be good resistance. This is the 30-minute. We've got a down close here. Red candle. That's all that means. And we have this little window of opportunity that I drew. Okay. Over here, we've got a bearish cross. Okay. Now, those of you that are a little more advanced, you would recognize this area right in here as its own window of opportunity, which we exceeded. We then pulled back to the BBC again. And the question always, based on the training that you receive in the live training room, do I have to wait for this candle to close before I can go short? It's entirely up to you. Once it starts building a red candle, the sooner you go short, the less distance you have to where your stop loss needs to be. Because if price trades above that swing high, then that means you're on the wrong side of the trade. So yes, you can wait. You could even wait for price to break below red and falling. We had a brief moment of blue and sideways there. You could wait for price to get below red and falling, which in this case also took you below this previous swing low, which very well could have acted as support. Your entry could have been on this candle right here. Okay, so we entered the window here. Well, we tapped the top of it during the 1230 candle. We've been traveling in earnest since 1330. So that's this candle right here. Okay. Now this first tap happened on the 1230 candle. Let's see where that is. Come on. Right there. This is the 1230 candle. This is 1235. Okay. So if you got triggered in over here, okay, into this window of opportunity, price on your 5 minute, okay, even though we caught this spike right during this candle, look at what happened on your 5 minute. It tells the story. You've got the wick sticking up above the BBC. That means price is rejected in this area. So that means if you're in a short trade, if you have a shorting opportunity as dictated by your larger time frame, 30 minute, then what your 5 minute is telling you with this candle, it's lending support to price going lower. It's just market structure. Okay? Some might see that as a head, a shoulder, neckline. We're not really pattern recognition people, so. But if you are, there's absolutely nothing wrong with that. Many, many ways to look at the market. So, we got, what, halfway through the window over here? And how big was that window? Oh, it looks like we got better than halfway. Top of the window was 24, I don't know, 65. And the bottom was 24.35. Yeah, I think I recall saying it would be a 30-point window of opportunity. And so we've seen, now, what do we have here? We got red and falling below the VUEC. This is on 30 minute. Slingshot is blue and climbing, which honestly, as the charts try to play catch up after this type of an event, my guess is that this blue and climbing here is a reflection of this pullback to the BBC. So if this move is going to continue down, if we are going to go back to test the lows, if we're going to completely close this window of opportunity, I suspect the blue and climbing and the slingshot is going to become red and falling. And the green line down here is just going to chase it right down to the bottom. Stay on top of it, looking at your smaller time frame. So what obstacles are there right now on the 5 minute? Other than the swing low created by the last candle, nothing. You've got red and falling overhead. You're below the BBC. Down in the slingshot, you're red and falling below the 50-yard line. Green is already starting to chase red down to the bottom. And here we sit. So if this was a 30-point window, there's 15 points in the trade now. If you took profit, there'd be nothing wrong with that. If you took partial profit, if you scaled out of some of the position. That would be acceptable as well. At this point, I would think you would be able to pull your stop loss just right above the high of the current 30-minute candle. Where would that put you? That would put you right there, above that wick. No. Stand by. 24.75. So based on the 30-minute chart, you can put your stop loss at 24.75. Okay. All right. Let me walk you through a little bit of. Let me show you what logic did. We didn't do a lot in logic. I mean, it's just, you get it. Logic down here. Last week, week 84, we had 33 alerts, 27 actionable, 2 were stopped out, 7% of actionable. Okay. That's an unusually good week. We average about 20% being stopped out. Okay. So far, since last night at 6 p.m. Eastern, we've issued a total of 6 alert, 5 actionable, 1 waiting. In other words, 1, it's either in motion or hasn't triggered yet. Out of the 5 actionable alerts, so far, we don't have anything that has stopped out this week. But we're only, 1 session into the new week. Now, the actual moves or alerts themselves, I'll show those to you. Week 85. Yeah, so that's how week 84 ended up. We're now week 85. Okay, our initial alert was for the S&P in case, what I was hoping is what we saw this morning is that after the initial sell-off, cooler heads would prevail and we would catch a rally. Well, that didn't happen until the second limit down was lifted, and then we caught that rally back up to the BVC on the 30-minute. And we had a short on crude, 30.25 to 30.15 to 30.05. That's a 20-cent move. So, see, 25.15. No, that's a 25-cent move. So, no, I'm sorry. 25 minus 5. That's 20. $200 per contract traded. Now, we hedged that crude alert with an opportunity to buy 30.70 for an advance up to 30.80, and it did that. Now remember, we were dealing with, we had been crude or gold because the indices were locked up. So here's another short on crude, 30.75 to 30.55. And then a short on gold from 15.36 to 15.30. And I don't know if I showed you where gold went, but I will. See, here was the logic alert at 15.36. This was the concierge trade alert at 15.30. So the logic alert was a $600 per contract move from 15.36 to 15.30. 6 points, $100 a point, $600 per contract traded. Okay. That was what happened with gold. Everything else was in crude. And then we had another one this morning in crude. So 29.70 down to 28.90. So let's go see where that's at right now. We just hit it. Okay. So we put that on right at the beginning of the show. We talked about it, the whole window of opportunity, etc. And again, the alert, 29.70 to 29.60 to 28.90. That's an $800 per contract move. And that has happened since the beginning of the show when we pointed this out. The only real obstacle we had in our path was blue and climbing, but price was able to overcome that. Took us right down to the weekly trading zone, 28.90/95. We only have one more weekly zone below us on crude. $24.30/35. Now, could the market find support here and make its turn? Absolutely. If we continue lower, the next obstacle on the way to that zone below is right there at 28.20. If nothing else, it should be good for a bounce, perhaps back to the WTZ and the BBC, which would then give us our next leg to the downside. Blue and climbing's at the 50, and it's almost looking like it wants to hook and head on down with the rest of the gang. Okay, so let me just walk you through a little bit of this from last night. Again, we start 6 p.m. Eastern. Every night. Okay, that was the Trump bump from Friday. We talked about that. If you're on the trial, make sure you have access to this discussion group. And if you're already a passport holder, you should already have access to this group. But if you don't, just check with Valerie and she'll be happy to make sure you get connected. Okay, so this was crude at support. This was crude struggling to hang on to support, trying to rally. Now this was ahead of the Powell's holding his press conference, which again was by phone. And then John reports that we're limit down on the ES. Powell went live on the phone. Okay, here's crude taking out that support that we previously showed. If crude overcomes resistance at 30.80, this 5-minute chart shows a potential counter trend trade up to 31.70. And we had a 31.40 to 31.60 window. Now watch what happens. Okay, so we've got support here. Jerome said no to negative interest rates at this point. Okay, now you see how the BBC dropped into that window of opportunity that we defined? See, that changes things. Because we were looking for a rally up, but now the thing that we're trying to pull back to has dropped because price stalled and went sideways. Crude's failure to rally has brought the BBC lower. So this window no longer valid, and we're coming up on support. 30.60 to 30.70 to 30.85 to 30.95. Those were windows of opportunity. This window negated. So what are we looking to do down here? 30.60 to 30.70. to 30.85 to 30.95. Keep in mind, these are counter trend ideas. And here's what price did. Price rallied right up through all of those. The idea was to be long 30.60 to 30.70. If the coast is clear, ride it to 30.85. Look around, coast clear, ride it to 30.95. Okay. We're looking for it to move up. Again, this is counter trend, but that's what it did. It rode the back of blue and climbing right up to the BBC and took us above. Joe's got his goal on the GC, that was last night. So here's the 30-minute pullback on crude. Okay, and we've been looking at the 5-minute. All right, so we spiked on this alert here from 30.60 to 30.95 is $350 per contract traded. As the market did that on the 5-minute, it was doing this on the 30-minute. The whole purpose behind using the 5-minute to take a counter trend trade is because we knew that price was in the process of trying to pull back to the BBC on the 30-minute. How do we know that? Because that's what it always does. Price always reverts to the mean. And in our case, the mean is that green line, BBC, bull bear cross. When price closes below it, we're looking for lower prices. When price gets above it, we're looking for higher prices. And when we pull back to it, the pullback holds more often than it doesn't. So what are we looking for from here? A move, a continued move to the downside, which we got, and then some. 30-minute, I was just pointing out on this chart, this is a great example of support and resistance. It's alive and well. The rumors of its death are greatly exaggerated. You'll hear it said, "Oh, you can't trade support and resistance because there's these high frequency traders and there's algorithms and there's this stuff." And well, I agree, there is all that stuff, but it doesn't change the fact that price will move higher until it finds resistance. If it can't overcome the resistance, it will do an about face and go find support. When it can't go any lower, it'll turn around and go find resistance. We found support here, where? Right where the bullish cross happened. Please make note of that, especially if you're a passport holder, a member. Okay, price coming down to here. We fully expect that to act as good support. The price where the bullish cross took place. We see it happen over and over and over. I point it out on the show all the time. Now, the world, whoever that is, probably didn't expect there to be support here. We did. That doesn't make us any more clever than anyone else. It just means our tools identify some things that maybe some other tools don't. I don't know. So, support, where does that send us? Back to resistance. Price couldn't overcome resistance here. It couldn't overcome resistance here. It couldn't overcome it here. And it couldn't overcome it here. So, definitely resistance is alive and well. We'll go check on support, but resistance alive and well. Now, there's a dynamic here. Okay, when price pulled up here and encountered this resistance, the beginning of this resistance, where did it find it? It found it on the pullback to the BBC. And we expect that to be resistance. So we drop, pull back to the BBC again, drop, another pullback, right? Then a leg and a retracement, then a leg. Okay, and the market found support and was unable to overcome it. Sends it in the opposite direction. Back to resistance, back to support, back to resistance, support. Okay? Support and resistance. People will tell you it's old-fashioned, you know, step into the 21st century. It's still one of the most powerful yet basic tools that you should have in your toolbox. 30-minute crude has blue and climbing below. Price stalled after the pullback. Slingshot is bearish as well. Okay. Now, here's the pullback I'm talking about. And here's the stall. After the 30-minute pullback, we get the 5-minute stall. Natural flow for the session, sideways to lower, but we seem to have a lack of conviction on either side. Now this time that you see here, I'm in Phoenix, so I'm on Pacific time. So this would actually be 12:38 Eastern. Okay. Whatever your computer clock says on your computer when you run Telegram, that's the time it's going to reference. Then I said I have a short target on crude at 30.27. If not already short crude, consider 30.67 to 30.37. So that was a $300 per contract. Okay, here's the window of opportunity. Here's price entering or opening the window. I'll show you the reason for the entry prior to the window. Now, what do I mean by a window? Okay, I mean if everything I just said about support and resistance is true, okay, this chart shows us that we have support here. This is a 5-minute chart. We have support here. We have resistance here. So if the market is headed lower, I want to see a frictionless area where I don't have any obvious support or resistance. It's obvious we have support here based on what price just did. And it's obvious we have resistance here because 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 5-minute candles were unable to break free of this area. Now, why is this even an area? Look left. It's the previous swing low. This low led to this resistance. Okay. So we got price going from support to resistance. And after 11 attempts, 11 5-minute candles, it can't go any higher. So it turns around and heads the other way. The low of this candle, that's where buyers came in at one point and ran it up just a wee bit. So if I can enter below that low and get out before this big wick, because I really kind of see the support is right there. Yeah, price dashed down, but it was quickly rejected and sent back up. Okay. So I get below this low and I get out, right in this area of support before we go down to test the wick. Now we came through the window. Well, let me not spoil the story. Here we are, still sitting at the window. The window is open, ready for business. At the time, we had a an hour and 36 minutes to the London Open. Wanted to see if that was going to change things. Didn't. Okay. Price needs to... Now, I've highlighted two obstacles. Okay. Now, remember, we just entered the window on crude to the short side. This was all live in real time in the Telegram channel. If you were there, you were able to participate, ask questions. If you weren't there, you can go back and read it. So, first obstacle was this series of swing lows right here. Next obstacle is this swing low right here. Okay. Price needs to overcome these obstacles to close the window. And by closing the window, you know, when we enter a window of opportunity, I call it opening the window. And then when we exit, that's closing the window. Okay. Just something I made up. You can wait for setups that have no obstacles. If there are obstacles, now this is really important. If there are obstacles, it's important to know where they are. It's the difference between getting just stopped out and being clueless as to why. My indicators don't work. The world hates me. You know, I'm no good as a trader. All of that trash talk that tries to find its way into our conscious mind, and you have to take that stuff captive and send it back to where it came from. I mean, otherwise, the stinking thinking will destroy you. If there are obstacles, it's important to know where they are. So we clearly defined them for all of our traders last night. It's the difference, you know, that feeling of being stopped out, and it's like, man, I don't understand. All my indicators lined up. Saturn was in retrograde, and this line touched this line, and this green light started blinking, or this red light, and so whatever it is that you use, it's a 10. Everything's lined up. Okay? And then you get stopped out. And then you run the whole gamut of possible emotions. Anger, denial, grief, miserable. When you understand why a trade was not profitable. In other words, if buyers had come in at either one of these obstacles and started to run the market back up, yes, that would have resulted in a stop out, a non-profitable trade, but you would know why. Now, it's no consolation to your pocketbook or your wallet, but it is a consolation to who you are as a trader. Because what you're saying is I recognize there is an obstacle in the path of my high probability opportunity. And I'm willing to accept the risk in exchange for the potential reward. I mean, that's what trading is about. Exchanging risk for opportunity. Okay? So again, if buyers had come in at this level and took the market back up, hey, it's a stop out, but at least you know why. Buyers come in here. Same thing. Now, you won't always readily see the reason. In other words, while this is a high probability opportunity, we don't know what's going to happen next. I mean, in between these two obstacles, the president could have sent out a tweet, or the World Health Organization could have sent out a tweet. Any number of things could happen that would change the collective mindset of traders around the world. And now, instead of selling, everybody wants to be a buyer. That happens. it's not a high probability thing. Is there ever a high probability there's going to be a tweet, a presidential tweet while I'm in a trade? No, it's not a high probability, but I certainly recognize that there is a possibility. Okay. When you understand why a trade was not profitable, by identifying the obstacles before you even enter the trade, it means that you're willing to accept the risk in exchange for the potential reward. Even when a trade is not profitable, if you understand the why, it's a game changer from a psychological perspective. We all know how important that is. Yeah, I'm talking about controlling the noise between our ears. The real battle doesn't take place on the chart. The battle takes place in our head. This just does what it does. Price goes lower until it finds support. Then it goes higher until it finds resistance. And yeah, then it'll go lower until it finds support. So, here's a shot of us conquering the first obstacle. Second obstacle represents 40, that was a $150 per contract move. Second obstacle represents 40 cents or $400 per contract traded. If you entered closer to the actual 30-minute pullback, your results will be different. Now, that 30-minute pullback, again, was this right here. Okay? That's what we look for. That's what we wait for. That's what we do. Here's a 5-minute. Shows the reason behind my entry. Okay? These wicks sticking up here. So then we caught the second obstacle. And here's a 5-minute view. And there's those two little wicks sticking up. So 31.12 down to whatever it is here. And then had another alert. If not already short crude, consider 3067 to 3037. That is not a new alert, just referring that the idea reached the final target. See, this was forwarded. Okay, so I was just making a remark about what we'd already done. And I missed this question, and the answer is yes, Tim. I'm sorry I missed that last night. If a market is trending into the London Open, there's a higher probability the trend will continue as opposed to the Wall Street Open, which is more of a coin toss. So we had an alert on gold. This was the window of opportunity. The gold window is now open. Of course, the alert came out before we entered the window. So far, gold triggered 1536. Swing low so far 1531.90 or $400 per contract available. It closed that window. It was $600 per contract move. Gold now back to trigger. In other words, we got halfway through the box and we went back to the top. And then we came down and then we went back to the top. Why? Important prices, important areas are almost always tested. Back to the crude move, which was still headed lower. If trailing a stop behind crude, you could have used this simple trend line to just kind of guide you on the way down. Look at all these beautiful little pullbacks on crude. Simple and obvious. That's right, Tim. Crude window has officially closed at this point. Doesn't mean we won't trade lowers, just an observation. For those still trailing crude, obstacles below are 30, then 29.80, weekly trading zone, then 29.50, then 29. That crude window was worth $5.50 per contract traded. And this is a chart that Joseph shared. It's 5-minute crude. Okay. So there you have it, around the markets in a couple hours. A couple hours and 13 minutes. All right, good word for the day. Friday, we talked about toxins in the workplace. Today, I'll ask a question. What's weighing you down? Hebrews 12:1. Let us lay aside every weight. Therefore, we also, since we are surrounded by so great a cloud of witnesses, let us lay aside every weight and the sin which so easily ensnares us, and let us run with endurance the race that is set before us. Hebrews 12:1. On a recent radio broadcast, Dennis Rainey talked about Double Eagle 2, the first hot air balloon to cross the Atlantic Ocean. The men piloting the magnificent craft caught an air corridor that carried them all the way across the Atlantic. But when they were just off the coast of Ireland, they flew into heavy cloud cover, and ice began to form on the balloon's outer shell. They lost altitude, dropping from 6,000 to 3,000 meters in a matter of hours. They did everything they could to save the balloon. They threw out video cameras and food rations and even a glider with which they had planned to land. At about 1,200 meters, they transmitted their location and threw the radio overboard. Finally, at 1,000 meters, they broke through into sunlight. The ice came off in sheets, and the great balloon soared all the way into France. The Bible says that in order to run and win your life's race, you must lay aside every weight and the sin which so easily ensnares. And it's a lot easier to identify the sin you need to drop than the weight you need to drop. Why? Because often the weight is legitimate. Sometimes that weight includes responsibilities, pressures, obligations, schedules, entanglements. Today, you need to stop and take an inventory of what you're carrying. You need to face each thing squarely and ask yourself this: did God give me this to carry? Did someone else give it to me? Or did I decide on my own to just pick it up? Well, whatever's weighing you down today, lay it aside. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.